Markets in the green this week despite the government shutdown and stalled release of September's jobs report. How are investors reacting and what predictions can we make about the macro economy? Joining me now, Charles Schwab Chief Investment Strategist Liz Ann Sonders. Liz, great to see you again. Thanks for joining us.
Nice to see you too, Jack. Thanks for having me.
Sure thing. So let's start with a quick look at the news. Seems like the government shutdown is going to continue at least until Monday. The market shrugged it off. What's the impact for investors?
Well, it's not uncommon for the market to shrug it off. You look at past shutdowns, and that's somewhat par for the course. I think the issue this time is the availability of data. Not only did we not get the jobs report for September, if this shutdown continues too much longer, that runs the risk of causing problems for the October jobs report. In addition, the Bureau of Labor Statistics, which releases the jobs report that we're not getting right now, they also release inflation data, specifically the consumer price index. So that's another rub, and that can work into psychology. So I think it's more about the access to economic data that's the bigger issue than just market behavior.
So in the absence of all that information, investors will be looking probably even more closely at earnings. And you don't only look at the publicly reported earnings that we all talk about, but a broader set that also shows private companies. What are you seeing there?
Yeah, so the most common focus on earnings tends to be for the S&P 500, and we will be starting reporting season in a week or two. But there's a broader measure that gets released along with gross domestic product, GDP, and we just got a recent revision to second quarter GDP, which was actually a positive upward revision. So that's good news. The problem is after-tax corporate profits via a measure called National Income and Products Account, which is a much broader measure of corporate profits of the entire U.S. It goes down into smaller companies, S corporations, and we now have 2 quarters in a row where profits were actually in negative territory, and that just picks up a lot of the smaller companies. Also embedded in that data is a sense that we are starting to see more direct tariff impact because the wholesale trade category of those NIPA profits, that was particularly weak. In fact, a record amount of profit weakness going back to the start of the data in 2007.
So a lot of people are saying that any tariff hit is going to be a one-time reset. Is that your view?
Well, from an inflation standpoint, I understand the argument. One of the problems, of course, is that the rollout of tariffs has been anything but one time in nature. There's also ripple effects that happen. If you're, say, paying $5,000 more for a car, that increases the insurance costs, that increases the taxes associated with it. You can even look back to the 2018 period with tariffs. Many might remember that there was a 25% tariff on washing machines. Well, guess what retailers did? They raised prices on dryers as well because they're typically sold in a pair. So I think we have to consider the ripple effects, not to mention the fact that I might think of inflation in rate of change terms, how we read CPI and PPI and month over month and year over year and core versus headline. But the average consumer actually thinks about price levels. They think stuff is more expensive now than it was, X period ago. So I think it matters also in terms of the psyche of consumers.
No question that is true. Let's continue this talk about earnings. As far as those S&P numbers coming out, people will not only look at the raw numbers, but the forward look. What do companies expect coming on? And one of the things people will be looking for in terms of the AI trade is, are companies saying that they expect to get more productive thanks to AI? There's this huge capital spending, but is it really helping them? So what are your thoughts on that?
Yeah, I think that's really important. Obviously, when you have earnings season, it's important what companies are reporting relative to expectations, but that's rear view mirror. That's what they are going to report for the third quarter. I think it's the commentary about the future, both in terms of the expected trajectory of their profits, but trying to get more meat on the bones on 2 particular topics. Tariffs, which we already touched on. How are you thinking about them? Are you absorbing the cost? Because, of course, tariffs are paid by the U.S. companies importing the goods. Are you passing those costs on to consumers yet? So that's a piece of it, but also how you're thinking about the inflation backdrop, how you're thinking about artificial intelligence, to your point, Jack, really starting to get questions from analysts. Are you using it? How are you using it? How are you adapting to it? How has it impacted you? Particularly, has it been a benefit to productivity? Trying to get actual numbers on the productivity benefits associated with AI.
Yeah, we're going to need to see that soon. Unfortunately, we have to leave it there, but thank you so much, Liz Ann Sonders. Always
My
good to hear
pleasure.
your insights.
Thank you.